Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth. What's up, guys? It's Mr. Fit to Flourish, and today I wanted to do stocks and coffee a little bit different for this upcoming week. So this upcoming week is going to be the week of February 24th, and it's going to be a pretty big week. On the 24th to the 28th, it's the end of February. We just came off of monthly OPEX, option expirations, and there's a lot going on in the markets. And I want to talk about that. That's what I want to talk about today. But before I start, we always start our stocks and coffee with a quote. And today's quote is going to be, failure is delay, not defeat. So you might be taking L's when you're trading, but guess what? Don't look at it as a failure. Don't look at it as a loss. Look at it as an L. What is an L? An L is a lesson, and you learn from that lesson, you move on, and you grow. Okay? So if there ain't no pain, there ain't no gain. All right? So let's kind of take a look at what happened this past week, what's coming up next week, and what can we do with this information in the long run. All right. So let's take a look at the U.S. calendar, the economic calendar. So when you're trading, you need to pay attention to what's going on in the economy and with the economic calendar. Like, what's the market's trying to do? The market right now is focusing on the Fed and the Fed rates. Okay. Because basically, if rates are increased, that means that when you borrow money, all the markets are is money. Everyone wants money. All right. If rates are increased, all right, if you're just beginning trading, pay attention. Or if you've been trading, you can't tell where the market's going, pay attention right now. Please like, share, subscribe, by the way. But pay attention. If rates are increasing, then when you take out loans, you go to buy a house, you buy a car, you take loans from the bank. If rates are increasing, the amount of money that you're paying back on that loan is going to be a lot. Okay, so you're not going to have a lot of extra money in your pocket. But when the Fed decreases rates, then the rate at which you borrow money is less. So now you have more money to spend. So more money to spend. If rates are lower, you have more money to spend. That extra spending money is going to be thrown into cryptocurrency, thrown into the markets to try to make more money, right? That's what people do. They're like, oh shoot, I got this extra money. YOLO. This is the day and age of YOLO trading. It's all about hype stocks, hype trading, crypto, meme coins. It's stupid. All that extra money goes into the markets. Okay, that's all we need to know. But that's why you need to pay attention to economic reports. So Monday, nothing really happened. It was President's Day, so the bond market was closed, stock market was closed. Tuesday, Fed manufacturing survey, trash. Okay, just trash information. Nobody cares about this stuff. Housing starts, we kind of care, but not really. It doesn't matter. But then we also had the Fed FOMC meeting minutes. So people like to look at these meeting minutes to see, hey, what was going on? What were the words that the Feds used and discussed? What was going on in the economy? Okay, and basically the Fed is saying that, hey, we're going to be stubborn. We're not moving rates. We're going to hold the rates steady for a majority of 2025. Keep that in mind. All right. And then Thursday we had jobless claims, initial jobless claims, and they came in higher than expected. What does that kind of tell you about the economy? And it's pretty trash. Okay. If we have more people filing for unemployment, like, that's not good, bro. That's not good. And then we had Fed speakers speak. Nobody cares about any of these Fed speakers. The only person who can move the market is Jerome Powell. Okay. So all this other stuff is just trash. Like, for trading, when it comes to trading, it doesn't matter. And then Friday, we had PMI services, which kind of gives us a pretty good gauge on what's going on in the market. And today is February 21st when I'm making this video, but February 21st, it came in lower than expected. And this is an economic data point that we kind of want it higher. Okay, whether or not you know what any of this stuff means doesn't matter. Just know for this, you kind of want it higher. And this is the lowest it's been in 25 months, and it's below like this 50 mark. Okay, so this is not good. Basically showing us that the economy is slowing down, and inflation is kind of going up. Okay, inflation is kind of going up. All right, not really good. Consumer sentiment, low, bro. That's pretty low. How do people feel about being a consumer, about the markets? Okay, it's pretty low. No bueno. All right. So that's what's happened this past week. I'm going to show the chart in just a little bit. But what's going to happen next week? So next week on Monday, the 24th, nothing scheduled. And then again, Tuesday, Fed speakers, nobody cares. And then Wednesday, Wednesday, I'm just keeping it real. That stuff doesn't move the market. Wednesday, trash, new home sales, who cares? And then so Thursday, initial jobless claims. All right, GDP. So initial jobless claims and GDP. So initial jobless claims, the Fed looks at closely to kind of gauge how inflation is doing. So they're expecting jobless claims to come in at 225. If it comes in lower, the markets can rip up. If it comes in higher, markets can move down. And then on Friday is PCE, personal consumption expenditure, another data point. So core PCE, another data point the Fed pays close attention to kind of see how the consumers are acting. That kind of gives you a good idea on inflation. Like, is inflation ramping up or is it ramping down? Do we have extra money? Do we have money to spend? Do we have too much money to spend? Okay, so good stuff there. So Friday and Thursday are going to be pretty volatile. And another reason that Thursday and Friday are going to be pretty volatile is because earnings. So one of the biggest earnings plays for next week, or stocks with earnings, is going to be NVIDIA Schmidia. All right, so Wednesday after hours, NVIDIA is going to report earnings, and that's going to directly feed into the market sentiment on Thursday, which is also going to feed into jobless claims. So if NVIDIA is not doing good and jobless claims come in higher than expected, the markets on Thursday is going to be bloody red, okay? It's going to be like freaking Jaws, okay? Everyone's going to get destroyed. But earnings this week, again, let's take a look at earnings this week. What do we have? Major earnings that you need to pay attention to this upcoming week. Hims has been moving. Hims is like that website that sells freaking Viagra, Cialis, it's known for, and then some weight loss drugs, the injectable weight loss drugs, since there's been a shortage with Lilly and Novo Nordisk. So they've been able to do that. But now the FDA is saying that there's not going to be a shortage. So that's going to directly affect Hims and Hers, because Hims was able to fast track this drug and make this drug because there was a shortage. But now that there's no shortage, they're probably not going to be able to make those injectables anymore on an emergency basis. They probably won't be able to make those drugs anymore, which is going to eat into a lot of their profit, because everyone in America is pretty much obese. I'm not capping, like 70% of America is obese. So everyone just wants a quick fix, which is these injectable drugs. It's literally flying out of the pharmacy, but that's going to hit their profit quite a bit. So we actually saw Hims kind of fall this week, but we'll see what they report after hours on Monday. But pay attention to Hims, pay attention to Riot. TEM is a stock that Nancy Pelosi has been buying into. So already on Monday, pretty big earnings there. And then on Tuesday, we have Home Depot before market open. After hours, we're going to have Kava. Kava's been huge. AMC is just hype stock, so it doesn't matter. CART is going to be another big one. And then on Wednesday, massive, okay, CRM, which is Salesforce. We have Mara, which is Marathon. Mara is directly tied into crypto. And then we have AI, C3 AI. Snowflake, so Snow, and then NVIDIA, NVDA, okay? Those huge earnings after hours on Wednesday. And then on Thursday, pay attention before market hours, VST, Vistra, energy company, huge one. And then we have after hours Sound, SOUN, which is in the quantum computing realm. And then we have Dell, which is DELL, and then Rocket Lab, all right? Oh, and then also Archer, ACHR. ACHR is another one of those. I can't remember what exact, but it's been popping. All right, it's been absolutely popping. So big earnings this week. So pay attention to that there. All right, last but not least, let's take a look at the market and see, like, yo, what the fuck is going on? What's going on with the SPY, S&P 500? Let's just look at the S&P 500. It's gonna give us a good picture overall on what's going on. Okay, here we go. All right, if we look at the daily time frame here, we put in all-time highs this week on SPY. All right, we put in an all-time high right around $613. All right, taking out the previous all-time high. However, we immediately fell out of the sky after that. Okay, immediately we broke below the 9 MA and the 20 MA, and we literally came all the way down to the 50 MA. Now this 599 58 key level is a very important level. It's a pivotal level. If we break below that, break and close below that, we're going to see a move down to 595, and this is where our long time trend line is. So we have a pretty good trend line here. If we break this trend line, I kind of want to show this a little bit better. Let me just hide all of this stuff here. So if we break this trend line, this trend line is like this is our bull market trend line. This goes back all the way to October of 2023. All right. If we break this trend line is like the health trend line. If we break this trend line, the market might come down very, very, very hard. All right. So this is like a 2-year trend line, pretty much 2-year trend line. So just kind of look for that. If we break below 595, market can come down pretty hard. But 599 is what's going to set that off, because then we would end up taking out this low here. If we take out this low, I'm going to become bear biased for the next week or so if we take out this low, which is right at 599.58 pretty much. Okay, but we had a huge sell-off this Friday because of fears of stagflation, and also because it was OPEX, it was monthly OPEX. So we had this huge sell-off. Typically, with overexhausted bars like this, the next day we'll create what's called an inside bar, which is when we kind of gap up into this order imbalance, and then we get kind of a move to the upside. We don't take out the high, but we don't break below the low. We just get inside of this range. So that's called an inside bar. So I'm expecting on Monday, February 24th, probably just going to create an inside bar. We'll gap up above 602.14 and then make an attempt to 607.82. Potentially. All right. And there's this previous trend line I kind of drew. We might even end up just kind of hitting that at 605, but we'll see what happens. All right, we'll see what happens here, but definitely overexhausted move to the downside. We're probably going to get a little bit of a push back to the upside. If we open below 599, just look for puts. If we open up below 599.58, but then if we break this trend line here, then yeah, market's cooked. All right, market's cooked. So kind of watch that long time trend line. It goes back to 2023. So October 2023. Look at that for yourself if you haven't seen it already. But overall, markets are still in an uptrend. We just kind of put in this double top here at highs. And it was a really good reason, it being OPEX, and then, really it being OPEX, and then economic data coming in. It was a good time for us to kind of sell off when market's already at all-time highs. And it's not really a sell-off, it was a pullback. And people always get scared with these pullbacks. But what happens every time we get a big overexhausted sell, we gap up, we get an inside bar, and then we start moving back to the upside. All right, and then we might sell off a little bit, but when we get to that trend line, we gotta rip. All right, we gotta rip. So are we gonna come to this trend line and then rip? That is yet to be seen. But still, market is still bullish. Overall, still in this huge uptrend. All right, let's take a look at a couple more stocks upcoming this week. We absolutely killed APP. APP hit this previous high here. I think we can get a gap fill down to 388.40 to mitigate this order imbalance, and then get a move back to the upside. Microsoft, we took calls on Microsoft in this demand zone at 406.78. So what I'm planning on doing on Microsoft is I'm going to wait to see, do we hold this 406.78 level? I'd like to try calls again. I'd like to try calls again to the upside here on Microsoft. Because again, we're right back at the demand zone. If we break below 406.78 though, Microsoft might be cooked. All right, it's going to come down to 400. Below that is going to be an immediate move down to 389 and then 375 pretty quickly. PLTR has been getting smacked, but it's holding on that support level that I had talked about with my team. We have a big bottom side wick there. So let's see if this level holds. It should hold, and then below that is 97. Below that, we have a gap fill down to about $85. So we're going to be looking to see, do we get a downward break, or do we hold this level and make an attempt back to all-time highs? All right. So again, there's going to be a couple things. There's a ton of other stocks that I can look at right now, but I'm just going to keep it for the Discord. Feel free to join, link in the bio. But if not, just like, share, subscribe. Keep watching these YouTube videos. But hopefully that gives you an idea of like what's upcoming this week. A ton of stuff upcoming this week in the markets and big earnings. So pay attention. We'll get more of an idea of hey, is this just a pullback or is the market actually breaking down? And pay attention to Trump tariff news. Tariffs were kind of killing the market in the beginning of the year, but then we realized that it's really just a negotiating tactic that Trump is using to actually position the U.S. to create more jobs and to benefit really more for the economy, if anything. All right, so it's really just like a trading tactic. It's not really a bargaining tactic. It's not really actually tariffs, causing prices to hike. And then now we're getting tariffs paused until April 2nd. So pay attention to that. But then also pay attention to, hey, what is the Fed doing? Are they going to pivot to being more dovish or more hawkish? What does that mean? Are they going to be like, oh, okay, like we're chilling out, we're going to cut rates, or are we going to raise rates, or are we going to just keep them steady? The Fed is expecting to keep rates steady. And then also pay attention to initial jobless claims, PCE, CPI, PPI. So these economic data points on these days, those data points come out an hour before the market opens, and it gives you an idea of what is going to happen, what the direction of the market is going to be. Okay, and you don't need to know what they are, just know what is bad. If it's higher, it's bad. If it's lower, it's good. Like type stuff like that. So understand that, and then understand how you can trade off of those moves. Right. Anyways, that was Stocks and Coffee for today. It's your boy, Mr. Fit to Flourish, and I'm outie.